big opportunity. Invest 10% of your monthly income into this asset to retire in 3 years. What assets should we own as investors and consumers to survive any worrisome situation? Jim Rickards is an American investor, economist, investment banker, speaker, media commentator, and author on matters of personal finance and precious metals. Do you want to know how to invest your monthly income? Stay tuned till the end. Welcome back to Finance Explained. We all know the importance of gold. Let's see what he has to say about it. He went into more detail about the worth of gold in his speech at Johns Hopkins University in March 2009. He has always made an effort to alert his readers to the risks involved with our financial system in all of his best-selling books and blogs. He underlined the risk of Chinese monetary manipulation and covert gold supplies in his 2011 debut book, Currency Warfare. Rickards is constantly thinking about gold. In USA Today and Wall Street's best-selling journals from 2016, he wrote on the significance of gold. Gold serves as both a standard for currencies and protection in the event of a market collapse. He asserted in a different book from the same year that everyone who is wealthy is stockpiling gold because they anticipate a coming financial disaster. Rickards tweeted the current situation on November 1, 2011. He anticipated that there is something in the system that we don't know about from his books and talks. President Biden's thirst for Armageddon, he claimed, was the cause of the major central bank's insane increase in gold purchases. While the global energy situation worsens, Jim Rickards performs a lap of honor and declares, "I told you so." He criticized the foreign policies of the American administration and President Biden's blatant dishonesty in a tweet from October 19, 2022. Additionally, Rickards has previously discussed this, particularly in relation to unfaithful allies like Saudi Arabia, in his 2014 New York Times bestseller, The Death of Money. Rickards introduced the topic by describing hypothetical instances of financial warfare. He talked about the impasse in government politics and the wars with China and Russia. He truly is an authority on these topics. He issued a warning against relying too much on Middle Eastern oil producers and predicted that this would eventually lead to an economic crisis. Both the budget and the value of the pound have collapsed as a result of the impending worldwide monetary recession. The lack of dollars is a factor in the world financial crisis. You can see that equities and bonds are falling if you look at markets in the UK, the US, and other parts of Europe. The prices of gold, oil, and the euro in relation to the dollar have all declined. In 2023, the United States will still be eating up its strategic oil reserves while making few efforts to attain financial independence. The Fed is under a lot of pressure right now, despite the fact that inflation is starting to decline. With a noticeable CPI of 6%, inflation is still relatively high. Likewise, the employment market is still hotter than the Fed had anticipated, according to the most recent official figures. These factors prevent the Fed from defending a potential course correction. The latest bank collapses show that the Fed's quick and abrupt increases in interest rates are also starting to backfire. How will the Fed handle the situation if a systemic meltdown becomes serious enough to force a change in the Fed's plan of action? By raising interest rates on everything from mortgages to credit cards, the Fed may limit supply chain or cost-push inflation. Demand-pull inflation is the result of an opposite reaction to the negative impact of demand. They are unable to create gold since titanium is only available in Russia, and producing item B requires departing from the manufacturing line using input A. In addition to plant closures and shortages of essential items, rising bond prices can also cause supply chain disruptions in other ways. However, all forms of inflation will eventually squeeze costs upward. The opposite of cost-push inflation is demand-pull inflation. Demand-pull inflation occurs when an increase in demand for products or services meets a shortage of supply, raising prices to the point that consumers begin to alter their behavior. People begin to reason, well, the price hike is getting out of hand, so you better go out and get the item you need since the price is going to ultimately increase. If you plan to acquire anything, such as a car, dishwasher, or refrigerator, depending on your needs, you should definitely do so right away. If you wait 3 months, the price will go up considerably, and there won't be any money left over for luxuries. Because they are unable to do anything else, your essentials will continue to function as usual, and you will still have enough money each month to buy groceries and fuel for your car. If you subscribe to this channel, you can save a lot of money. You won't have as much money for discretionary expenses, and if the cost of your necessities rises, you might decide against taking a vacation, skipping that concert, dining out, upgrading your furniture or closet, or spending more prudently to cover your food and gas bills. Even if this causes the job market to stagnate or the economy to enter a hard landing, the Fed is expected to hike interest rates to control inflation. A 5.66% rate increase by the Fed was factored into landing markets. BlackRock anticipated that the Federal Reserve's policymakers would raise interest rates. Similarly, the institution is anticipated to implement jumbo-size hikes in rates and will raise interest rates by half a point at its meeting in 2 weeks. Bond yields are also rising, which is a warning indicator. Since 2007, investors haven't sold any Treasury bonds, which has caused the yield to rise above 5%. According to Jim Rickards, margin debt levels are currently double what they were during the 2008 financial crisis, when the market dropped by more than 55%. This excessively high debt is quite concerning. Approximately $1 trillion worth of borrowed money is present in the stock market. He has predicted that the upcoming market fall will be the fastest and worst market correction in history because it has grown from the levels caused by the trade war. He thinks that rather than recovering as it did in the wake of the 2008 financial crisis or the coronavirus crash, the stock market decline may last for years or even decades. Whatever amount of money the Fed prints and injects into the American financial system is irrelevant. According to Rickard, the type of hyperinflation we're currently facing did not exist prior to last year. He said that since the 1990s, inflation had been falling and was now only averaging around 2%. He suggests several actions that each investor can take to protect themselves or prepare for any unfavorable economic event. One says that up to 10% of your portfolio should be allocated to gold investments. The most resilient asset, gold, can protect your riches. According to Jim Rickards, one such asset that performs remarkably well when other things get difficult is gold. He claimed it to be the single safest investment for the future and predicted that the price per ounce might rise as high as $4 million. He asserts that nearly every multi-billionaire businessman, including Ray Dalio, one of the leading hedge fund managers who was constantly warning people about a downturn, has invested more than $400 million in the gold market. Financial advisors like Robert Kiyosaki and Dan Ferris have been employed by Paul Tudor Jones, musician Paul Tudor Jones, Bond King Jeffrey Gundlach, and Lord Jacob Rothschild, and all of them advise buying gold. Now is the ideal time for you to invest in gold. The next step is to have cash, which is another word for liquidity. He suggests that you keep at least 3 to 6 months worth of spending cash on hand. He thinks that the majority of individuals will experience total loss during the crisis's early stages. Any wallet gains flexibility by having cash on hand, especially in an emergency. A cash account is your best option if you need to access your money to cover living expenses. You shouldn't sell equities in a declining market because they tend to suffer during recessions. The possibility of losing a job or facing unmanageable bills is one of the most important hazards for people during a financial crisis. It will be tempting to use that cash reserve for some temporary relief when the recession hits and things get difficult. Knowing that you have other financial resources in addition to cash and gold makes it easier to navigate volatility with more confidence. For people to survive a recession, Rickards offered a different plan. Investing in anti-meme stock firms, he stated, is a special sort of deposit protection play that only a small number of investors are aware of. And these are some of the best anti-meme stock businesses to have. AutoZone and Freeport-McMoRan are two companies that have high return on invested capital, enabling them to expand and prosper even during a recession, along with Goldman Sachs, Linux International, PepsiCo, and Raytheon Technologies. During the 1929 financial crisis, Joseph Kennedy, the father of John F. Kennedy, employed a similar strategy to establish the Kennedy family fortune. So, are you ready to invest your money? If yes, comment below. Also subscribe, like, and hit the bell icons. Refer to other finance-related videos too.